Welcome back, everyone. Weekend report. Now, first of all, the headline of Trump last Friday about imposing 100% tariffs on China starting November 1st and full control on software products will have significant impacts across the board. Now, it is unclear how and at what extent and across what assets will react the most and how exactly smart money will play this out. Now, if we look at the past, we know that the markets do not really buy in these Trump tariffs. So the tensions and the fear, the market moves across the board won't come from the fact that, oh no, we're going to have 100% tariff on China, and then there's going to be more inflation, etc. There's going to be a side that plays on that, especially for the Feds, because they have to be more cautious. But smart money is not buying that tariff equals inflation over the long term, because they know that eventually these tariffs will dissipate and we will not. We're very unlikely. They're very unlikely to actually be in effect over the long term. With that being said, it creates further tensions and risk of escalation, geopolitical risk of escalation between the U.S. and China, especially with regards of Taiwan, and how China is helping and has been helping Russia with its invasion of Ukraine. And I've talked about that. The Ukraine war is more of a proxy war between China and the US, in my opinion. I think Russia's playing a part, obviously, the biggest part, but it wouldn't be able to do what it's doing and sustain a war for that long without any help from China and North Korea and other Eastern countries. If you want to call it the East versus the West, it's a little more complicated than that. I could make a whole video about that, but it's a battle between the East and the West, and that's kind of the first proxy war between these two. So that's what the market will fear the most. Okay. Now you have to understand that the microchips are made in Taiwan. So more tension, and I'm not surprised. I've told you guys months ago the war cycle was going to accelerate going into Q4 of 2024, of 2025, and that we are in a headline market. So I'm not surprised that this happens. I think it's only going to get worse. Now, here's the thing that you need to understand. Within the last few hours of the markets on Friday, a lot of investors, when we did not have such a big drop in like 2 months across equities, across indexes, S&P 500 and NASDAQ. Now, Trump made a first statement about, there's no need to meet China President Xi Jinping anymore, blah, blah, blah. That's how the market reacted. But here's the thing. If you look at volume and you look at all the orders that went in before the close on Friday, investors expected for that pullback to bounce right back up, because they didn't really buy. And I told you they didn't really buy that Trump statement from China. But then, so a lot of leverage longs were executed around that level on S&P 500 and NASDAQ, around that big support before the close. And then just after, Trump slaps the 100% tariffs on China, which had massive impacts on the crypto market. And I mean, it was the largest liquidation in history. So this gives us, look at that candle here. This gives us a pretty good understanding of potential risk when futures open for indexes and when New York opens on Tuesday morning. This is going to get fucking wild. And you have to understand something. If you look at the bigger picture on the weekly time frame, there is a lot of signals that point out for a potential declining phase for US indexes, US equities, that could bring S&P 500 down 35%, all the way down to 4,500 here over multiple months, and NASDAQ all the way down to that broadening formation, basically, which NASDAQ, I think it brings NASDAQ to around 15,000, 35, 40% down. And obviously, fundamentals are driving markets, but we are on the brink. And listen, that rally, it's a lot of irrationality. And this is what happens when you have irrational market behavior like that. At some point, fundamentals will catch up. It always does. It always does. And the risk of geopolitical risk between US and China is a big, big, big deal. Do you understand? Without Taiwan, there is no AI. You really have to put that in your mind. There is no AI for at least another 5, 6, 8 years minimum. And there's going to be massive global changes if it happens. The relationship between US and China is very important, and they know that. It's like a double suicide. It's not good for China, it's not good for the US, and they know that. But who's willing to pull the trigger? I think China is ready. I think China doesn't really give a shit. And here's the thing. If they're looking at the US market right now and they see that it's over leveraged, it's overextended, and it's all AI hyped, they know that if they launch a fucking missile on Taiwan, the US market collapses. You understand? So that risk needs to be calculated. And obviously, the best hedge funds in the world do it. Bridgewater, big banks, they do it. They understand that risk. But retails and dumb money don't think about that. Okay? So you really have to have a bigger, broader picture of the current macros in order to understand the risk of that rug pull. I mean, listen, a declining phase of 40%, in my opinion, is nothing. I think we could see something much bigger. I'm a bit doomsday when it comes to equities and all the AI, drive that's over leveraged and pumped up by private equity. But we could talk about it for a long time. Now, in terms of metals, if you look at metals across the board, gold, we look at silver, the weekly chart, we look at GDX, and then you can look at the 200 weekly moving average. GDX is trading 121% away from it. If you look at silver, we're trading 90% away from it. If you look at gold, is trading 76, 80% away from it. It's very overstretched. And all three RSIs are well overbought on the weekly time frame. It's a big deal. It's not the daily time frame. I mean, look at the monthly time frame. Look at the monthly time frame. GDX overbought. Silver overbought. Gold massively overbought. So this is a big deal. And at some point, sentiment will have to be resetted. Now, if you look at, we can use gold as a good, market leader in terms of longer term price targets. If you look at previous cycles from the high to the next high, we're talking about 13, 14%, that high to that high, 13 to 14%, that high to this high here, which was the expected and actual top of the rally. That move here, I mean, I've talked about that multiple times, could be considered a rally by itself. It was wild. That was that really decalibrated the whole chart. Because if you bring that all the way up here, it's a whole new thing. Now, from current prices here to 4,000, we're talking about 15% roughly. Now, there's going to be a lot of profit taking, and a sentiment reset trap will happen. What I think is more likely to happen as I think gold will, move to 5,000 and then continue its way to 6,000 and 7,000 in 2026 would be some sort of like trap here, minor correction, then very strong upside to 4,500, and then a declining multiple month phase correction before continuing higher. That drop here would just be to reset sentiment on the near term before popping to 4,500 and then really mind fucking everyone. And it has begun. I mean, I was right. Remember when I said that gold was very likely to break that channel to the upside to touch 45, 40, 30, 40, 50 roughly, and then blowing up. We saw how much of correction that was? 2.72%. It's nothing. The trap has only begun. So obviously, if you look at the 1 hour time frame, you say, we didn't go to 40, 50, we went to 40, 60. These are minor details. When I share these big picture flow and outlook, I don't really give a shit about a few hundred pips. You really got to understand that. I'm talking about 1,000 pips. If gold pushes to 4,150 and then does my trap before moving to 4,500 and doing its intermediate cycle correction, I don't really give a shit. It's for me, 45 or 4,150 is the same thing. That's really a big difference that dumb money retails have a hard time, understanding. If you look at my Instagram video I've posted that has 400,000 views, and that kind of went viral about the 4,000 trap. A lot of retailers say, gold's not gonna pull back. Oh, you were wrong. 4,000. Like, people are so retarded. It's incredible. Don't be retard. Understand how smart money works and be patient. Understand how markets work and be smart. Just be intelligent. Do your research. Educate yourself. Otherwise, you're fucked. You're just not going to understand anything. It's going to be drastic. You're not going to get anywhere. You're going to be in a constant battle. And we've seen that with crypto, $19 billion liquidated from leveraged positions because fucking exchanges were posting memes about October. Do you really think when memes are about October, Bitcoin's going up in October, everyone knows Bitcoin is going up in October, it's going to go up? That's not how market works. You can't have a one-sided fucking market. It's not how it works. It's not how it works. Even if everyone doesn't sell, at some point, liquidity will fuck itself. It doesn't even have to be manipulated. It will just have an imbalance and it will create massive wicks. Do you really think Bitcoin dropped that much because of a Trump tweet on, there is no tariffs on fucking Bitcoin trades? So why does it move like that? What's the risk for Bitcoin if China invades Taiwan? Please tell me. There is none. Do you understand? It's just fucking liquidity. That's how it works. It's manipulation, liquidity. So this is what happens. Weird fucking moves like that happen when you have, unregulated markets that are just fucking wild west. Now, I'm not saying it's bad and you shouldn't trade it. Do your fucking research, do your own job, but don't expect a beautiful fucking chart like you have on the Coca-Cola stock with Bitcoin. Do you understand? But gold is a beautiful chart. Look at that. Beautiful. I love it. Now, I think we are very much due for a reset sentiment. I think we're going to get one soon, but the Trump tariff headline on Friday might change things. I don't want to play it hard, but when we were here and the U.S. kind of confirmed its invasion to in Iran, confirmed that it joined Israel in Iran. Was it? Yeah, it was here. I said that a headline will create a lot of FOMO. So now gold is at 4,000. Listen to that. Gold is at 4,000. We've never seen so much media attention driven into gold. Remember, right? It's fucking crazy. Everyone's talking about gold. And then you have a tariff headline from Trump that it's not really sustainable. Like geopolitical risk, yes, I've talked about that. There's a lot of risk. But do you really think, I don't think China and the US are ready just yet to go all in. And if they do, even if they do, I mean, gold is up a lot. When an asset goes up a lot prior to a risk happening, and well, when that risk actually happens, the market reverses. Do you understand? Because all the dumb money are like, oh my God, we have to buy gold now. And then boom, market dumps. So a headline when prices are at all-time highs, very overextended, can be very counter-fundamental. Do you understand? It's going to be an opportunity for smart money to exit the trade and then buy lower when the sentiment is resetted. So I would be very careful. And I think that it could be a trigger, and smart money will know that it's not buying the whole Trump tariff, but retails do. So there's a lot of retail liquidity coming in the market to buy gold, allowing them to exit their trade at a good price, and then liquidity pushes down prices. Do you understand? So that's what I'm expecting across gold and silver. And then, look at the fucking gold volatility index. When you spike like that, look at the go and look at the previous spikes. Usually means a top or bottom is near. When things get crazy. When everyone's talking about gold, usually means a reversal is coming. I'm not saying. Look at dust. The dust. Look at the volume on the weekly. Look at that. That's how many bears entered markets last week. Look at that. This usually signals a top. I'm not saying gold is going to fucking reverse right now when we open. We could push to 4,150. We could push to 4,200 and then drop. But allow time. Be patient. Be smart. Think about the bigger picture. Now, this doesn't stop you to do whatever the fuck you want if you want to day trade it. And I've thought, remember last week when I've shared, go back to the updates, I've shared the shake-off levels at 39.57, that shake-off level. That was the first shake-off level. What do you see here? What do you see happening? And we had minor intraday dip levels. I think one here and one here. What do you see? Go on the 15-minute time frame. What do you see here? Structure, allowing you to buy the dip, move stops at break even or secure profits 200 pips. What do you see here? Nothing, just a breakout. What do you see here? Another low time frame structure and then a bigger time frame structure. That low time frame structure gave you, before dipping here, another roughly 200 pips, right? And then the bigger picture gave you 500 pips. Do you understand? This is all you got to do. Keep things simple. What do you see here? Huh? I mean, come on, look. What do you see? It's not that complicated. The only reason you're not able to flow is that you're either not accepting risk or you're trying to take trades that are out of your balance. You're not managing risk according to your fucking account, which will only lead, or you're bound. Listen, and I've said it many times. Do I want to be catching the short from here all the way down? Of course I do. But that's not my focus. Do I catch it? Yes, I've got over a decade of experience doing that. But if you're, 2 years, 3 years in, or even a few months maybe, you shouldn't be trying to short and buy gold. You should only be the gold has been going up. Focus on the dip buys. Even if gold breaks that level and we drop into a multi-month correction cycle, okay, we go back to fucking sub 3,000. I don't give a shit. Look at how many bounces there is. Go on that wave. Look at that bounce. Bounce, 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 bounce. There's multiple bounces that you'll be able to buy. Become a professional gold dip buy bounce. Gold dip bounce buyer. Just focus on that, and you'll see there's going to be significant changes to your trading. You'll see, you'll see huge upgrades. Now let's close this up with the dollar breaking out of its multi-month range. Seeing how it's trading right now, we could potentially, start a short squeeze. I mean, I was expecting that high not to break. We'll really have to see how the opens plays out with all the headlines, etc. I don't want to predict that. I just don't fucking know. Usually more because remember, the tariffs are going to play a huge role on the Feds. Smart money knows it's not going to have an effect, an impact long term, which is why they're not really buying it. But the Feds have to play a very careful game. So they're going to have a much bigger, much more important, cautious approach to these headlines. Now, with FOMC 2 weeks away, the markets could think that the Feds are going to be a little more on the hawkish, neutral side than the dovish 25 basis point rate cut that was expected from markets. So we're going to have to watch the Fed fund futures and how, what's the expectation for the future Fed rate cuts and how this all plays out. Because if the market says, the Feds are more likely to be a little hawkish, then the dollar could begin its multi-week, potentially month intermediate correction cycle as I expected, and we've talked about multiple times, and at least reach that 200 daily moving average. And I mean, we could even go up to that 200 weekly moving average before continuing in a declining phase. That is expected over the long term. Also, watch carefully oil as it's dropping pretty significantly, and is going to have that's good for the Feds, by the way. If oil goes down, it's good, less inflationary pressure. So you want to be watching that. You understand? So tariff could bring the dollar up. Oil moving down at an aggressive pace could put some, remove some of the pressure from the tariff headline. So we'll have to see how the whole market assesses that. But overall, expect extreme volatility as we go into the week. Monday, US, Canadian, Japanese bank holiday, allowing China to significantly manipulate markets. Volatility equals incredible intraday setups, but it also equals potential rock pulls. So you want to be cautious and you want to have an open mind, keep a well managed flow, and allow time to build up. Don't try to jump into trade, and don't take trades with greed or FOMO. Just take the trades that respect the setups, respects the keys, and you'll see results from there. All right, welcome to